The Dukascopy TV team once again brings you the week ahead, where we invite a guest to talk to us about several key data releases or events that could shake the market in the week beginning Monday the 29th of October. Today is the first day of the trading week. Dawie Roodt, Chief Economist at Efficient Group, joins me on the line. Hello, Dawie. What do you think investors and market players should be keeping a close eye on this week?
Well, I think there are a number of issues that are very important at the moment. Of course, in the short term, the question is going to be what the impact of this storm in the United States will be. We know, for example, that the stock exchange will be closed today. So nature is always potentially having a huge impact on economies. And in fact, nature just closed down the most liquid market, equity market in the world, and on the short term, in the next 2 or 3 days, we will know what the potential impact on their economy will be because of the close down of the financial markets, but also the possible infrastructural damage that this storm can cause in the United States. Apart from that, I think there are a number of very important issues that the market will be keeping an eye on this week. Of course, the Bank of Japan will decide on monetary policy tomorrow morning. There could be a couple of disruptions in Japan. Clearly, the Japanese debt levels are at totally unsustainable levels. But my suspicion is that the Bank of Japan will announce a further round of quantitative easing in Japan. The Japanese debt, state debt currently stands at 235% relative to GDP, and that is totally unsustainable. The big underlying story, however, is what is going to happen in the United States of America, because we're getting closer to the election date now, and the two candidates are apparently neck and neck, and it's unclear on who is going to win this election. If it is Obama, it will be business as usual, and we know that Obama's approach will be to use the fiscus to stimulate the economy as much as they possibly can, despite the opposition that he gets from the Republicans. We also know that if Obama wins again, that the monetary policy is likely to maintain or remain as it is, and that is very, very accommodative. However, if this is a Romney win, then of course all sort of things can happen in the United States. In fact, all sort of things can happen in the United States, even despite who's going to win the election in the end. If it is a Romney win, chances are that the fiscal approach to the economy will be a little bit more conservative, a little bit more restrictive, and that can lead to all sort of negative economic consequences in the short term in the United States. As far as the monetary policy is concerned, Romney made it clear that he is unlikely to nominate Ben Bernanke again as governor of the Federal Reserve, and in fact Ben Bernanke indicated that he will not be available to be nominated again. The question then, of course, is what's going to happen to monetary policy, and my suspicion is that even if there is another governor in charge of the Fed in the United States, that he won't have much of a choice but to continue with the so-called quantitative easing approach that they have been following for the last 2 or 3 years or so. So even if it is a Republican win, I think that whoever is going to take over at the Fed will maintain the current course, which eventually will lead to things like, for example, inflationary pressures and the like. So from the biggest economy in the world, the main thing will be who's going to win this. And from the third biggest economy in the world, of course, Japan, is what will be the extent of the next round of quantitative easing by the Bank of Japan. And
what kind of results do you think we can expect to receive from the German Consumer Price Index released today?
Well, clearly what is happening in Europe is that the Germans have painted themselves into a corner, and the rest of Europe have painted themselves into a corner as well. They're all locked into a very unhappy marriage. The Germans do not have much of a choice but to keep on assisting the southern European economies. Well, the southern European economies do not have much of a choice but by trying to implement certain austerity measures in their economies to please the Germans. Inevitably, what will happen is that the Germans do not have much of a choice but to maintain a certain approach to these Europeans, whereby the Southern Europeans will be supported, while the Southern Europeans will try to please the Germans by trying to implement certain of these measures in their economies. I'm afraid that the possibility, I think what is likely to happen over time in Europe is that it is inevitable that we will get more integration, that is financial integration, bank supervision integration, and eventually also integration by way of the fiscal policies in Europe. What we are seeing at the moment is the birth pains of the United States of Europe. The alternative will be that the whole experiment falls apart, and that will inevitably lead to great recession in Europe, which is likely to spill over to the rest of the world, and it will be pretty much the same as Lehman Brothers 5 years ago. It will only be something like 10 times bigger or so. So I think we are all into this unhappy marriage. We will all be affected by this unhappy marriage in Europe, and the inevitable outcome eventually must be more integration, because the alternative will be far too damaging and painful for Europe to contemplate and to accept, and for the rest of the world as well.
Currently, US NFP stands at 120k. What do you think we can expect to see from US change in non-farm payrolls on Friday?
Well, yes, the non-farm payrolls is one of those indicators that are very important in the United States, because the Federal Reserve really keeps a very close eye on that. The dual mandate of the Federal Reserve is to keep inflation in check, but also essentially to make sure that everybody is employed, or as many people as possible are employed. If that number deteriorates, then it will mean that the Federal Reserve will maintain a loose monetary policy for longer, or maybe even relax monetary policy even further. If the figure improves, it will mean that they're actually successful in getting the U.S. economy, or at least getting people employed in the U.S. economy. And in a very ironic way, the worse the number on the non-farm payrolls, the better the financial markets are likely to react to that, because it simply means if the non-farm payroll is doing badly and fewer people are employed, it simply means that the Federal Reserve is likely to do even more to support the financial market. So quite ironically, a bad number on employment will actually be good for the financial markets, because it will be a sign that the Federal Reserve is likely to step in and do even more to support the financial markets. I do think that we will see a bit of an improvement in employment in the United States, but I think it will take, in fact, a number of years before we get that number down, the total unemployment level down in the United States, to much more acceptable levels. I expect that unemployment will hover around about 8% in the United States for many years to come, and it's unlikely, even with very loose monetary policy, that number will be significantly reduced within the next 2 or 3 years.
And which releases do you think will most affect the markets?
I think the data that will affect the markets mostly will be the non-farm payrolls in the United States, and it will also be the decision by the Bank of Japan. Some inflation data in Europe may indicate that inflation pressures are building up in Europe, and I think that will also be seen, initially at least, as a good sign and will be supportive of the financial markets. Inflationary pressure building up in Europe will be a sign that monetary policy is doing what they are trying to achieve, and that is to increase inflationary pressures in those economies. Apart from that, I think the main thing that certainly will be on the headlines mostly will be the election in the United States.
Thanks for joining me, Dawie. Well, that's all we've got time for right now, but stay tuned to Dukascopy TV for more updates and interviews. For now, though, goodbye.